This is Shelley Craft. We're coming to you live on SNN Live. We're at the Hard Asset Conference in San Francisco. Standing next to me is none other than Mickey Fulp, the mercenary geologist.com, I might add. Mick, it's been a long year. Welcome back. It's the year end. What do you think? What's going on out there, Mick?
The markets are brutal, Shelley. We have a combination of debt crises in Europe that doesn't seem to want to go away. We think we've got that solved a bit, comes back and hits us below the belt again. That combined with an ongoing debt crisis in the U.S. has made the markets fearful, little panicky, unsettled, and very volatile.
Volatile? Let's see. One day it's up 300, the next day it's down 400, and that's only the Dow. We're talking about 30 stocks right there. But look at the volatility. Now, from a trading standpoint, you got to love that.
You do.
But as an investor,
you got to embrace volatility. It's my new mantra, embrace volatility. Too many people look at volatile markets and they become fearful of them. But for me, a volatile market, ups and downs, and it's not only the stock market, but the commodities markets too. So,
that's a good point.
So it's all the markets, futures, options. Look at copper, it goes willy-nilly up and down a dime or 15 cents a day. You look at gold, it can go up $50 one day and down $50 the next day. So what that does
is a $100 swing.
That's exactly right. So a $100 swing is about what
8%. You know, you're looking at crazy numbers.
Yeah, 7% of the value of gold. So what does that do? That presents buying and selling opportunities. So if we could convince the retail investor to look at volatile markets and look at those as opportunities, it would make him sleep better at night, number one, and it will also enable him, if he plays the market right, you buy on dips, you sell on the uptick, and you can make money in markets like this.
Okay, now, remember, salty dog right here, right? You don't want to really stick around and try to pick tops and pick bottoms either. No. I want to run that by you.
No, not at all. But you buy on the downtick, you even put in stink bids, and then you sell on the uptick. So it's this incremental little thing you're playing. You're not playing for doubles or triples or the big kills, but you're just watching the market, you're looking at the charts, and you buy on dips and you sell on upticks. And it's
okay. So now here's the question, and I think our viewers are going to like this question. Now you look at a stock, you look at an option, you look at a commodity, and you like it. You want to own it as well. You don't necessarily want to own it to sell it. You want to own it to hold it, right? Come on. You know what I mean?
Too.
So there's a point in time where you buy it on a dip and you might hold some and you might sell some. So let's take that into view.
Well, and absolutely. If you find a stock and you think it has long-term fundamental value, then put in a stink bid and do a risk-reward profile and say, I want to own this stock at this price. And who cares if it's trading 5 or 10 or 15% above that? Put in a stink bid. Now, and it just might get filled at the end of a day one day.
What's a stink bid for those that might not know?
A stink bid is a bid way below the current value of the price. So, and if that one gets filled, then you might want to put one even lower, and maybe that gets filled. But this is only for companies that you have picked before with very strong fundamentals, and they're beaten down for one reason or the other. There's tremendous tax loss selling in the market right now. So this is, for me, not only an opportunity to rid myself of a couple of dogs that I picked this year. It didn't work out. But then I'm going to take that money and put it into companies that I may already own to average down, put in a stink bid, or even a new company that I've done due diligence on, looks fundamentally strong, and it's a buying opportunity.
What sector do you love coming into 2012?
I will have to think very hard about that. What I am doing now, I'm looking at oil plays. I like some of the valuations in small oil companies. So that's one area I'm moving into.
That's a big shift for you.
Yeah. Well, I've played around a little bit in oil and gas. I'm not going to tell you I'm going to go in all in. But I think what you want to do, the gas market looks horrible, still looks horrible. So you want to pick some up and coming small oil producers that are cash flow positive, have manageable revolving line of credit, and are drilling development wells, not big far-reaching exploration wells, but development wells. So that's part of the market I'm focused on right now. I'm also going to take on at least one copper company. I've been sitting on the sidelines waiting for evaluations to go down. They're very low right now, and it might be.
Do you have any stink bids in on any copper deals?
I probably do. Yeah.
I had a feeling that.
Yeah.
So anyway, little oil companies that are cash flow positive, and gold and silver.
I've, over the course of the last year, I've moved a lot away from the gold sector. I found them overvalued in the early part of the year. Now they're pretty well beaten up, but I see opportunity in other things right now. So I'm not going to negate the idea that it's time to buy some good gold plays, but and there are some out there. It's just not my focus at this particular time.
So it's not stink bid time yet. Anyway, one last thing. Uranium.
I am continuing to buy some very beaten up uranium companies. I am tax loss selling a uranium company that I intend to buy back after the 30-day wash sale period. So I looked at it, I said, it's trading for cash value right now. It's not going to go any lower than cash value.
You would think not. I mean,
I don't think so, because it's a tightly held uranium company. So, but there is no reason for news to come out before the first of the year. So for me, that generates a tax loss sale. I'll come back and buy the thing after the first of the year for probably the same price, maybe a few cents more. But I do want to own this company because I think it has a very good long-term future.
So for those of you who are wondering about this 30-day sale, it's called the 31-day rule. Just Google it and look it up so you'll know what we're talking about. We don't have enough time to explain it right now. But we are here with the Mercenary Geologist. And what is that website?
MercenaryGeologist.com.
Easy enough. Thanks for coming on to SNN Live.
Thank
Always
you.
good to have you.
Always.